The guiding principle underlying the development of the Digit platform is that all functions of the firm should utilize a single integrated solution, with users ranging from individual financial planners to portfolio managers to risk oversight to even the CEO of the firm, and covering all aspects of the wealth advisory lifecycle, from engaging with clients to managing investment portfolios to monitoring the overall book of business. And all of this in one place. I'm now going to log in with credentials that associate me with a user profile, determining my authorization rights and access privileges, which differ for different user types. I will be navigating the platform using the menu bar to the left, where the layout is organized on the basis of user functions, from monitoring the business to managing clients to modeling portfolios and trading. So first of all, we'll take a high-level view of the business as of May 31st, 2019. We see in the panel to the right that we currently have assets under management of close to $440 million. This has grown year to date by an increase in deposits of $12.5 million and a performance of $34.6 million, which is broken down into income, capital gains, net of fees, for an overall return of 8.8%. The path that the AUM growth has taken to date is illustrated in the panel to the left, where we saw strong growth in the early part of the year, tapering off a bit with a decline in the last couple of months. We can also look at the drivers of AUM. For example, we may want to break down the total portfolio and look at it by asset class, or by currency, or by strategy, all as user-defined attributes we can set ourselves, where, for example, we can see which strategies contribute the most to AUM growth year to date. Furthermore, if we scroll down and look at the panel to the right, we look at the breakdown of our AUM by asset class, 60% into equity, cash equivalents, and into fixed income. And then we can drill down further and see which strategies are contributing the most, and into US corporate bonds, where we can see the allocation by individual title. The panel to the left illustrates our performance to date across asset classes. We see that equity has performed the best, and drilling down, we see that it's specifically Canadian equities, and drilling down further, we see the individual stocks that have contributed, from worst performer to best performer. We can also switch on the fly and break down our business by households. And we see which households are contributing to total AUM, as well as the individual performance by household to date, from best to worst. Finally, if we scroll down to the bottom, we can see what the investment flow has been for the last 3 years, quarter by quarter. And we see that there's always been a positive inflow of assets, with the exception of the most recent quarter, and all of this broken down by inflows across asset classes. So for the past quarter, we saw a flow into cash from fixed income and equities, in addition to a net outflow from the firm itself. Now, the power of the application is the ability it gives to look across our entire client base and focus in on individuals. And so now I'm going to turn to a series of reports that allow us to quickly move from an enterprise view down into granular levels. For example, I can look across advisors, and if our interest is Alan Weinstock, and then we can look at Alan's business across individual households, narrowing down into the Miller household, for example, and into Bernard Miller and Marilyn Miller, and into individual accounts. I have been viewing one of the report templates I have previously created. In fact, I may have defined quite a number of reports. Each report, its aggregation hierarchy, and the measures I choose to view are all user defined. I can select any attribute I wish, and I can choose the calculation method I want and set that as one of my columns. I can also choose the aggregation hierarchy I like and drill down on any bases I choose, all very flexibly. So in this particular report again, I may be interested in which households under Allen Weinstock have the highest market value, or who might have the greatest cash balance, because I might have a new investment idea. I may want to know who is increasing their net deposits into the firm, or who's taking money out. I may be interested in which household has paid the most fees. Suppose now we check on which household has had the highest 3-year return. We see that it's the Pritchetts. If we investigate the Pritchett household, we see that it's comprised of Jay Pritchett, Gloria Pritchett, and an individual trust. We note that in particular, Jay Pritchett has had a significant decline in the past month, despite having a very strong 3-year return. We also know that Jay is having a quarterly review next week. So let's check out the Pritchett household and see exactly what's going on. Now, when we look at the Pritchett household, we see they've had strong year-to-date growth of 8.8%, but the panel on the left shows that there was only 4.3% growth in the last year due to a market correction that occurred in Q4. And now, of course, the most recent drop. We may want to be prepared for our meeting in terms of demonstrating the value we have provided over time. And we see the returns over 3 years as being quite robust, and the returns over 5 years being very strong. And if we separate out the currency component, we see that the international diversification has also helped Jay smooth his returns a bit. So now let's look very specifically at Jay. And in case he has concerns about recent performance, we can scroll down to these panels that show in one place his past performance, present exposure, and future risk profile. Now, Jay clearly has a very heavy exposure to equity. If we look at Jay's portfolio very specifically, we see that that's indeed the case. So now let's check out and understand Jay a bit better. Let's look at his client profile. We see his KYC information. If we go into his investment profile, we see that he has been determined as having very strong investment knowledge and a very high capacity for taking on risk. Okay, so now let's check any mandates that we might have associated with Jay. And we see that the Pritchett household has spread its accounts across 3 mandates. And Jay in particular is associated with a capital appreciation mandate. If we check this out, we see that Jay has placed his 401k and IRA accounts with this mandate. And we see that Jay's objective is for long-term growth, and that we have associated a maximum growth model as his target portfolio. And as you can see, Jay's overall asset allocation is compliant with that, with a little bit of a warning on low-in fixed income allocation. So now let's check to see if we've done any goal planning with Jay. So we look back, and it seems in our discussions with Jay that we talked about Jay retiring at the age of 65 with an income of $300,000. Now, if we associate Jay's very aggressive profile with this, we see that with a 10% return and doing a Monte Carlo simulation, this projects to Jay achieving his target with well over 90% certainty. So we have been quite successful in working with Jay on his goals, and the strategy at that time made sense. However, with only 6 years to retirement, maybe it's time for Jay to dial back a bit and be less aggressive moving forward. He only needs a 4.5% return to reach his goals with 80% certainty. So let's now look at comparing Jay to different model portfolios. We've associated him with a maximum growth model, and as we can see, he's tracked to it quite well. Panel to the right shows high risk associated with that high return. So if we want to dial back a bit, we could consider some other model portfolios that we have available, such as a defensive model and a balanced portfolio. Now, we may suggest to Jay that while he has performed well so far, perhaps it's time to dial back the risk and move closer to a balanced portfolio where he can still achieve good return, but with lower volatility. If we scroll down now, we could see in the panel to the right how Jay's allocation compares, and we see he's tracked very well to the maximum growth. And the panel to the left shows that over 3 years, he's done well. However, as we've seen in the last month, when the market has turned, so has Jay's portfolio along with the maximum growth model. In the last month, he would have performed better with some of the safer portfolios. So let's see how we might suggest some trades to Jay that might dial back his risk a bit. So what we're going to do now is look at Jay's position, and we're going to associate as a target portfolio the balance fund. We see to the right that we're considerably over in equity and considerably under in fixed income. So what we can do as an example, we can dial back on risk a bit by increasing our weight in a fixed income fund and lowering it on a couple of equity funds. What this will do is rebalance his portfolio, and then we can preview these trades prior to execution. And at any time, after we have established and revised mandates across any of our households, we can always track and see whether they have breached any of the guidelines in terms of allocation. So we can sort all our households by those that have breached or those that are approaching breach. So thank you for listening to this demo, and hopefully I've been able to demonstrate the power of the Digit platform in giving users the ability, with just a couple clicks of the mouse, to move back and forth from an enterprise view into individual households and accounts.